Contango. I'm looking at the USO oil fund, and I'm hearing people say that the price of oil is negative or it went negative, and that's wrong. That's not how it works. This is Brian Lewis with MMT Investing, and things just changed. So I got a tweet from Jeff Snyder here talking about the oil prices. So he says oil is now under 30 a barrel to March 21st and under 27 a barrel into November 2020. So the oil price has the spot price right now is down, and then it goes up a little bit, and then it's down, headed down out to the end of the year. Okay, and this is what the S&P did during that time. Where's yeah, here. Okay, so we get dead cat, and then we get the crash, and then we get the bull trap on the S&P, double top, and here's the spot price of oil is down, and the future price of oil is higher, but now it's going down more. And what Contango, all that Contango means is that the spot price is lower than the futures price. And that's not crazy, like just on its own. That happens sometimes. But what's crazy right now is that the spot price has crashed and the future price has crashed, and people are holding on to their spot contracts and they want them to go up, but they're running out of time on the end of the contract. And the reason this is crazy is because the spot contracts are for physical delivery of oil. So everyone that's holding spot contracts that are running out of time has to either sell those contracts or they have to accept physical delivery of barrels of oil. And that's not, I mean, speculators are not trying to do that. So they're just trying to wait until the end of the contract to get out of them. And then they're having to dump the contracts and they're going negative. So that's what the contango situation is relative to the future price and why people are dumping these contracts at crazy low prices. And then it looks like the oil prices are going to come up and they'll get corrected relative to the futures price in a few months, but the futures prices are still going down. So this is very bad for the economy. Having low oil prices that are continuing to go lower is bad. And that's just a look at the contango, and then Jeff Snyder likes talking about the oil and the dollar. And the oil is one of the big things that backs the dollar. It's the commodity backing on the dollar. And the dollar also has, corporate collateral, and it has like, mortgage-backed securities like housing collateral. And all of this collateral and the oil, all of it is now junk. Like everything backing the dollar is now junk. And this is why the crashes are happening and the economy is looking bad. Without the entire health situation, all of this stuff was happening before any of that even started. Um, so that is a look at oil and dollars and collateral and just kind of the world monetary system and how it's all the collateral backing the monetary system that they use to give loans is now junk collateral. And that's a big reason why the banks can't give loans, and there's no more housing loans for like expensive housing now. They're dropping everyone's credit scores and like what your score is that you need. Oh, look, oil's going down more. The score that you need to get housing loans now, you need a higher and higher score, and they've stopped giving any housing loans out for high-end houses, and companies can't get loans now, and especially international. It's an international thing, so the emerging markets and the international banks are really tight and not loaning money, and that's what this whole contraction is, a worldwide monetary contraction. And the oil is highly related to that. It's the main commodity backing of that whole international monetary system. So this is a big deal. The contango itself, just the spot being lower than a future price, is not that crazy, other than the spot requiring physical delivery and people have to dump the contracts. So that is the general idea. This is not investment advice. Happy trading. Cheers.